let's go to this next story. U.S. credit downgraded. Oh, I'm sorry. Let's go talk about aliens first. Let's not talk about the U.S. credit rating drop. Is that fine? Let's ignore these important stories.
We got to talk about Barbie first.
Future financial. Yeah, Barbie. There you go. Another case. Let's just dedicate the rest of the show to Barbie because that's what matters.
I'm good.
That's not good enough. We're not going to strike enough. We have to talk about the aliens some more because aliens are real. Don't you know? This is not the same week as the alien story came out. This is actually when Trump's indictment came out. But Fitch, which is one of the few prestigious credit rating agencies, you got Moody's, S&P, Fitch downgrades the rating from AAA status down to 2A. This is 2A plus, I believe. This is not Gary Swindler. What's the guy's name? We'll find out. Play this clip of the gentleman from Fitch talking about it.
Fitch, as you know, downgrading U.S. long-term credit to AA plus from AAA follows their rating watch negative call back in May and is the second downgrade ever by a major agency after S&P back in 2011. Joining us first this morning on CNBC, the man behind that call, Fitch Ratings co-head of the America's Sovereigns, Richard Francis. Richard, great to have you with us. Thanks for the time.
All right, thank you.
I would love to know sort of some color on the timing and the thinking behind the call now. As some have pointed out, some of your quantitative models have actually been on the mend the last 6 months or so.
Yeah, I mean, honestly, this is a steady deterioration that we've seen in some of the key metrics for the United States for a number of years. Debt to GDP in 2007, general government debt was less than 60%, and now it's 113%. So there's been a clear deterioration. Furthermore, we're expecting fiscal deficits to rise over the next 3 years, and we expect debt to continue to rise over the next 3 years. And furthermore, because of the higher interest rates and the higher stock of debt, we're now seeing the interest burden rise pretty fast, actually, in the case of the United States. So the underlying numbers are, especially on the fiscal and debt side, are quite negative.
When it comes to
all right, let's cut right there. I mean, isn't that just fascinating? Now, I don't know what to think here. Is it, half of me says, what took these guys so long? You just downgraded America finally?
Yeah.
We have been bankrupt for so long. But there's the other side of me goes, what does that mean? Why is our credit rating going down? Because, quite frankly, we can just print the money, right? This is interesting. You were telling me Walls was bragging about Minnesota's credit rating. Isn't that right?
Yeah, apparently we have AAA status or whatever you call it.
We do, yeah. And that's just a bond rating. So basically, the lower rating you have, the higher you have to charge in interest rates. Or sorry, not charge. The higher interest rate you have to give the creditors.
And obviously we can't put it all on Biden, but it's happening under Biden, which means it's ultimately his responsibility.
It's a uniparty. It's a uniparty problem, right?
Of course, right. But, who's president as it's happening? Joe Biden. And so it's almost like a little bit of a slam for Tim Walz to be saying, well, it's AAA here in Minnesota. It's like, well, your favorite president is causing all these problems for our country.
And Tim Walz was a congressman voting for all those big budgets that ended up creating more of a deficit. 2011, he was actually in Congress in 2011 when S&P downgraded our credit rating. Yep. Now, he was too busy creating resolutions for Klaus Schwab at the time, so he probably wasn't paying attention. Yeah, that did happen. Tim Walz signed or had a resolution praising Klaus Schwab and the great work of the WEF.
Yeah.
You know what's interesting about this coming now is that this is like a couple days after BRICS got together and announced their new currency. And there are like a dozen countries that are signing on to it. Well, this very well could be the downfall of the U.S. dollar as the world reserve currency.
Well, and this is the thing. Half of me is like, what took them so long? The other half is like, we just print money, right? But it's like, we actually are defaulting on the debt. And I brought this up during the discussion on the debt ceiling, okay? We are already defaulting on the debt. When you control the money, you devalue the dollar. If you sell a 1-year treasury, right? Okay, and they're basically selling to us, but they sell it to like China and they sell it to the Federal Reserve. That's just phony. But they sell the debt, and you get, let's just say it's 3% interest rate on a 1-year treasury. But inflation erodes away all that plus another 2%. You lost money by locking your capital in that U.S. Treasury. So they've already defaulted on the debt. So this whole rating system is kind of goofy. The rating system, and I'm sure there's some smart guys over there at Fitch and all Moody's and all that. But it's like, I'm sure they're talking about this stuff, right? But in the end of the day, their assessment on paper is, are they going to default on making good of the payment in U.S. dollars? And I don't know if they're ever going to do that. And that's why we are completely screwed financially in the United States, is because the only thing we can do to solve our problems down the road, especially as interest rates go up, is keep printing money. And when you keep printing money, you technically aren't defaulting on the debt. You're paying them back with dollar bills, but those dollar bills are useless, right? It's a bad bet. Of course, the best bet right now is a 2-month treasury. You're getting like 5% for 2 months, which is, well, you don't get 5% annualized for 2 months. It's a great rate of return. We got any important comments here to read?
Base Minnesota says it'll really hit home if and when the U.S. dollar loses its reserve currency status.
Yeah, that's
Sorry, I don't know
right.
why I couldn't do that.
What's Glenn got to say?
Glenn, just jumped. Trump administration spent a lot of money increasing the federal deficit.
Yeah, and that's true. Glenn's making a great point. It's not. It's a uniparty. Trump, and we've faulted Trump many times on this. This is actually one of the ones where Jesse doesn't actually defend Trump. You know, Trump. He's always got the
only thing
4D
that
chess.
on the 4D chess, Trump said that because of the China virus, he is going to cancel all of the debt that we owe to China. So that's going to be a great start. He's going to have a lot more things to do. But, when we look at trade deals and things like that, we haven't had a president in the modern era that ever, was putting America first in those trade deals. So
How does that
I think
work?
we're going to see some improvements if Trump gets in there. That's a bet of mine.
I feel like we're jinxed this program. We haven't had a single Rumble rant, so we're going to stop reading comments until we get a Rumble rant on there. I feel like we'll be totally jinxed. What was your comment now, William?
How do you cancel the debt? Do you just say you're not paying it?
Yeah.
Right.
Yeah, you would know who you're making those payments to, right? So you say,
Well, what does that do to our financial relationship with China?
Well, I mean, it
would
blows
make
it
it
up.
that's a
It'd
good
be,
thing,
It'd be
but
really
that's 'cause
complex,
it's
and it's
theft.
going to start the negotiations. There's going to be, a massive trade deal that's going to accomplish a lot of this stuff. But it first starts just by coming to the table saying, F you, we're not paying you back. And it takes that kind of attitude, because if you just kind of go in soft, then we're never going to get out of this entanglement with China. We're too dependent on them. America needs to start producing things at home. And we need things to be American-made, and the only way to do that is by starting to cut at the debt that China has with us.
Well, and this is the dangerous part about it. Okay, so why do we have a trade deficit, right? There's no such thing as a trade deficit. I don't people don't talk this way, right? There's no such thing as a trade deficit. Why would anyone sell more goods and not get anything in exchange? It doesn't make sense. Really what a trade deficit is, instead of them giving us a certain amount of goods and we give them the same value in goods back, we give them some goods back and the rest are in dollars. And what do they do with those dollars? And they invest them into our U.S. debt, right? Because what else are they going to do with U.S. dollars? It's China.
Yeah.
They got to convert those dollars. So eventually they got to either convert those dollars into goods and services, mostly goods, or you got to buy treasuries or some kind of investment tool. Actually, it's kind of scary. They do buy like companies in America and buy stocks as well.
And land.
But they got and land, and they got to do something with that money, right? Otherwise, why would they sell so much? So if you basically say we're not going to pay China back, well then we got a problem, because whatever we're depending on them in selling us goods, that goes away. So they got us on that one, right? But we got a real problem, because there's really no such thing as a private company in China. They're all owned by the communist Chinese government, right? So, yeah, very goofy thing. But once again, I've said this before on the show. Most of our debt's not owned by China. People think that's like the majority of the debt. It's not owned by China. I think China owns like $1 trillion or something like that.
Is it a plurality of the debt, or is it?
No, it's not even close to plurality.
Who owns the most?
Let's look it up.
China owns the most.
No, the most of foreign holders.
Right. Yeah, that's what I mean.
Yeah, but that's
Coca-Cola's up
that's
there too, right? Like I know there's
the vast majority of our debt, and we'll have to see if I'm wrong on this. We just Google Dawson to see who owns U.S. debt. There must be a chart out there. I think maybe the Fed now owns the most, but I still think it's U.S. creditors. So basically, imagine you own a mutual fund. You might own any of your retirement portfolios. Probably indirectly invest in U.S. treasuries, okay? Insurance companies, insurance products, investing in U.S. treasuries. Because
supposedly Japan owns the most.
was Japan surpassed China? What's it say here? Who owns U.S. national debt? Can we click on that top one?
What is the balance?
I don't know. Looks legit. Okay, so what's that? I can't read the screen.
Yeah, I can't
here.
read that.
Okay, so intragovernmental holdings is a little. Okay, so that's not what I wanted to look at. Do we have a breakdown of the? There we go. Is that a breakdown of the public debt? There we go. This is what we want to see. Can you zoom in on that? Okay, yeah, and I think I was right. Fed and government accounts, big portion of it.
Then foreign is the yellow there.
So foreign is the orange. Okay, so China or Japan own the majority or the largest chunk of that. Yeah, see blue above that's mutual funds. So you can see the orange represents probably a third, right? And then you got depository institutions, states and local governments, pension funds, insurance companies, U.S. savings bonds, other. Okay, so the vast majority of the debt is not owned by foreign entities. And of those foreign entities, if they just did China, it's a small sliver. And by small sliver here, I'm talking about like probably $1 trillion. So like really large amount, but just relatively not the largest.
Yeah.